Hi, this is Ashish, Head Investments at Motilal Oswal Private Wealth, and I thought this is a good time to give you a quick peek into what to expect from this year's budget, which is going to be announced on February 1st. This will be a vote on account because there is a general election slated in May, and whichever government comes into power, they'll have to vote the budget in the two houses of the parliament. There are some key things that one needs to watch out for. First, how is the government balancing its finances? Now, a key component within the balancing is the GST taxation. Government expected that the GST would average closer to 1,10,000 crores, and that would result in robust indirect tax collections. However, what we've seen till now, the GST has been averaging closer to 98,000 crores, and that is going to cause a shortfall. So instead of, let's say, 18 lakh crore plus collections that was estimated in the budget estimates, we'll probably end up closer to 17.2 or 17.3 lakh crores. Now, this has to be made up somewhere else. However, unfortunately, there is no other component or head where this can be made up. So, for example, they were budgeting 80,000 crores of inflows through divestment. Now, so far in this financial year, we've seen divestments worth 30,000 crores. There are some more divestments expected till the end of this financial year, but we'll have to see how much of it can be done in the next couple of months. So there is bound to be a shortfall. Now, typically what happens when there is a shortfall in revenues, the government in power tries to stick to the deficit by cutting down expenses. The unfortunate part is a lot of the expenses that has been laid out by the government is not discretionary, and they do get spent during the course of the year. So what really suffers is capital spending, and capital spending means that if you don't spend on infrastructure today, then you're jeopardizing future growth. So this is something that people will watch out for pretty keenly. We were supposed to come down to a fiscal deficit number of 3.3%, which is closer to 6 lakh crores. However, what we believe is that given that revenue collections are going to be short, and a lot of expenditure has already happened in Manrega and in the rural belts, we will probably see that fiscal deficit will come closer to 3.5%. Now, fiscal deficit 3.5% ain't that bad in an election year, because people do expect the government to spend a little more on populist measures. For the on the personal taxation front, we do believe that they will do the customary enhancing of the limit. The limit for tax exemption may go up to 5 lakhs. Apart from that, we don't expect any major announcements. Actually, the budget over the years is becoming more and more irrelevant, and it's becoming a annual accounting exercise. What becomes important to watch for the budget is A, what is the fiscal deficit guidance, B, what is the government borrowing limits, because the fiscal deficit then decides how much the government will borrow next year. Now, why this is important, especially for fixed income investor, if government goes, the fiscal deficit number is higher and the government borrows more, then there is a concept called crowding out, where the private sector gets less money to borrow from the system. That can increase interest rates, and it could also enhance inflation, because some part of that deficit can be printed as money by the government. So we believe that the government will stick to 3.5% fiscal deficit number, which should be welcomed by the market. The other keenly watched item will be the subsidy item. There has been a lot of farm distress over the last couple of years because realizations at the farm sector has been low. So there is already talks of giving more subsidies to farmers. Now, there are two ways it can be done. You can either waive off loans, which has been very popular in the recent past, but a better way to do it, and this is also being talked about, is direct benefit transfer. So something that has been done in Telangana, where you actually calculate the acreage held by small farmers, and you calculate an amount per acre that you can directly transfer to farmers. Now, what people will watch out for is A, what is the total amount, and the number being bandied about is closer to 1 to 1.2 lakh crores, but more importantly, whether this will be a new subsidy or whether the earlier fertilizer subsidies or insurance subsidies will be subsumed into this. Now, depending on how they present it, it will be between 70,000 to 1,20,000 crores. However, this is an item for next year, and the government, whichever is voted into power, will have to figure out how to balance the subsidy in the P&L of the next financial year. So, so as I said, the relevance of the budget is going down over the year. Most of the indirect taxes have been subsumed into GST. The only three items out of GST is basically tobacco, tobacco, petroleum and liquor. So we may see some hike in excise duties as pertaining to tobacco, but other than that we don't expect much. What should an investor do? I think our advice for investors is similar to what we gave at the beginning of the year. I think yields are very, very attractive in the fixed income space. AAA bonds are trading closer to 8.25. You should lock it in now, because we expect a rate cut by RBI anytime in the near future, probably in the Feb monetary policy. They will see how the budget is, and then they will take a call on monetary policy. So fixed income investors have never had it better. They should lock in their money in AAA bond funds, which are giving closer to 8%. As far as equities is concerned, the broader market has seen huge correction last year. So we continue to advise you to build multi-cap portfolios, and in fact, compared to 2017, we are actually comfortable building out an equity portfolio today, with the fact that, knowing very well that you're going into a general election, there will be some volatility around the general election. A month before, month after, there will be some volatility based on the expectation and the outcome, but then the markets will start tracking company results and the broader growth in the economy. So with that, I wrap up my budget expectation view. Let's see what finally comes out in the budget. Thank you very much.